Hey guys, it's Sasha. In the last 2 weeks, the US stock market is down 5%, and in pre-market trading as I'm recording this video is down another 0.7%, putting it at the lowest point since the beginning of November. Big tech and AI stocks that led the stock market euphoria of the last 2 years are now leading on the way down as well. Palantir, the company that is a perfect example of this exuberance when they set valuation records trading at over 100 price to sales and 1,000 price to earnings and becoming one of the most hyped stocks in history, while Palantir is 33% down since its peak in February and is down another 5% so far today as I'm recording, going below $80 a share. The PE ratio is now down to just 442. Google is down 19%, Amazon is down 15%, Microsoft is trading 4% lower than it did a year ago. The market is bleeding red, with tech stocks leading the sell-off. So are we at the start of a big stock market crash? And if we are, how bad is this thing going to get? Well, there have been a few separate triggers, but yesterday Donald Trump announced new tariffs on Canada, Mexico, and China. Trump has imposed a 25% tariff on imports from Canada and Mexico and a 20% tariff on China. The Canadian tariff excludes energy, which has a lower 10% tariff. Last time Trump threatened tariffs a few weeks ago, the point seemed to be to get Mexico and Canada to increase security presence at the border to stop illegal immigration and the drug trade. This time around, Trump hasn't yet made any immediate demands, so these new tariffs that are effective today may well be here to stay longer than a few hours. If Trump goes and does another U-turn like last time and does a deal with Canada and Mexico and turns the tariffs off, we might also get into a boy who cried wolf scenario. If the tariffs are repeatedly used over and over as a stick to force your trading partners to just give concessions every time you ask them, the effect is probably going to wear off pretty quickly, given that these tariffs have been announced twice in about a month so far. The impact of the tariffs on trade and prices is likely to be significant if they do stay, although companies are not yet increasing prices very much because they're still waiting to see if these tariffs actually last more than a day, which is how long they were in effect last time around. The reliance of the United States on imports is very high. Popular products like the iPhone, for example, are manufactured in China and would be subject to these new tariffs. About 9% of cars sold in the United States are made in Canada and another 14% in Mexico. So tariffs there will hurt big manufacturers like Ford and GM. And the issue with introducing tariffs with 1 day's notice is that it takes longer than 1 day to build new factories in the United States and to replace the entire supply chain. And while long-term impacts could help the US economy grow, it may well do. The short-term repercussions of blanket tariffs announced at short notice can be very severe. With blanket tariffs, everything is going to get more expensive. Everything except my course, because my course is now on sale for the next few days. You can get 10% off the Investor Playbook before midnight on Sunday, 16th of March. I will be adding more extra lessons to the course in a couple of weeks, and there are live sessions every Thursday. Go and use the code SPRING2025 to get 10% off. The course is all about the ins and outs of investing in stocks, how to do analysis, how to read financial statements, everything in between. Go and check it out. Now, the tariffs come on the back of the events that happened at the weekend with Ukraine's President Volodymyr Zelensky visiting the White House. And I am not a politics channel. I don't want to get into politics. I hate politics because it is a giant can of worms. But one of the unintended outcomes, one of the unintended consequences of what happened over the weekend and how it happened is that a lot more people in Europe are fast becoming a bit less keen on buying American products and services. Whether you agree with those people or not is a separate point. And it could be that it's one of those short-term things, it just blows over, the war in Ukraine resolves quickly into peace, we move on to other news, forget that this whole debacle ever happened, or it could be the start of a very different long-term sort of relationship between consumers in Europe and companies in the United States. So the market is now beginning to try and assess all of these risks. And that's why we're seeing a huge amount of volatility and the market is selling off. And naturally enough, We've already had Canada hit back at the United States with their own reverse tariffs. Canada is introducing a retaliatory 25% tariff on $107 billion worth of goods. 1/5 of those tariffs are going to be effective immediately, and the remaining 80% of the tariffs will go live in 21 days' time. President of Mexico, Sheinbaum, has not announced any concrete response measures yet. Those will be apparently coming on Sunday, but she seemed pretty pissed off this morning when she said that the US has no justification for implementing tariffs. And China has said that they will fight to the bitter end and announce tariffs on 15% on American agriculture imports and tariffs of 10% on some food products, and these tariffs will go live in 1 week. The markets are not very happy with all of this because trade wars, especially trade wars between very close trading partners, are not good news for business. And I am already seeing all over social media all the usual suspects post stuff like, buy the dip, this is peak fear, oh my god, things are so cheap. They show this sort of chart that says that this is the lowest point of the market because trust me bro, and then they go and quote Warren Buffett saying that you should go and buy when others are fearful, and now is obviously that precise, that exact time. The problem with a lot of this noise is that the vast majority of retail investors, including the vast majority of finance influencers peddling all of this, have never invested during a stock market crash. Many weren't even old enough to work, let alone invest the last time we had a real stock market crash, because the last time that the market actually genuinely really collapsed was in the financial crash from 2007 to 2009. The flash crash in 2020 really doesn't count because it went down and then straight back up almost immediately in a V shape, and the follow-up crash in 2022 when the market overall fell 25%, it kind of almost didn't happen because it was masked by the big tech valuations running very hot because of the AI hype wave at the end of the year. And talking of AI, it wasn't long ago when Project Starfish, or whatever it's called, was announced in the White House with $500 billion apparently being committed to it. Back then, Satya Nadella did an interview with CNBC where he said that Microsoft is good for investing $80 billion a year into AI. And then a week ago, the same guy, Satya Nadella, went on a podcast and he was asked about all of these never-ending claims about achieving artificial general intelligence, and he said, us self-claiming some milestone, that's just nonsensical benchmark hacking to me. And throughout the podcast, he was being very cautious about the value generation potential of large language models. It seemed like maybe something has changed. Recent news says that Microsoft have cancelled a whole tens of billions of dollars worth of new data center construction for AI out of nowhere. And given that Microsoft is a heavy investor in OpenAI and own the rights to 50% of their profits, that is a very different tune to what we've been hearing over the last 2.5 years. The world has been pricing big tech on the expectations that large language models will be the gateway to huge, impossibly big revenue and profit growth. But the more time passes, the more people are beginning to question whether that's actually going to happen. Going to, get the massive financial impact of LLMs. Food in the shops and many products in the United States are about to become a lot more expensive with these tariffs coming in. Eggs are already more expensive than gold, and if the tariffs stay, this is going to have a very noticeable impact on inflation. Just as the Fed is now just beginning to slowly move the interest rates down 2 years after real inflation came down in the first place. And the problem with tariffs is that the Fed will not really be able to do much about prices, because a tariff-fueled inflation means that prices are increasing not because there is too much demand, not because the economy is running too hot, not because of any of these things, but because of a sudden sharp increase in taxation. And then even if the demand suppresses slightly, prices can still be going up because people don't have profit margins that can absorb that sort of tariff. So Jerome Powell and the rest of the FOMC are going to be sitting like lame ducks, unable to do anything about managing inflation in the short term. But going back to the sentiment, there is a whole load of people out there, all over social media, Twitter, YouTube, everywhere, saying that this is peak fear. And you should be buying stocks hand over fist. This is the time. You've been waiting for this moment all this time, right? And the truth is, neither of those people nor I know where this thing is headed, right? But the stock market overall was down 6% from its all-time high of just a few days ago. Many tech stocks are down to positions that they were in just a few weeks ago. There are still a whole load of tech and AI stocks with insane, crazy valuations that have only just come down a tiny fraction. If this downturn does become a crash eventually, this right now is not even remotely close to peak fear. My first job out of university was at a big American bank called Capital One. When I joined, Capital One stock was sitting at $75 just before the financial crash. After Lehman Brothers collapsed, the stock went down in a vertical line to $7. That is what peak fear looks like in reality. Many other banks were hours away from going under, with US and UK governments stepping in to stop the collapse getting even worse. If you go and spend 5 minutes reading finance Twitter, you know that we are nowhere near peak fear, because at peak fear, you don't have a choir on social media singing "Buy the Dip" in unison. People feel completely lost. People are wiped out. Nobody has any money. Nobody wants to own stocks ever again. People are declaring personal bankruptcies. Workers are walking out of big companies with cardboard boxes, not knowing how they'll pay the bills next month. I had that. That's what I was doing during the financial crash, walking out with my cardboard box like everybody else. That's what peak fear actually looks like. The stock market being down slightly by 6%, and AI stocks going from a valuation of "fuck me, how much" to "whoa, that's expensive" is not even remotely close to peak fear. Will the market rebound from here? Possible. Maybe we're just seeing a little tiny blip. Or will the market crash by 40 or 50%? Well, that's also possible. In fact, we haven't really had an actual stock market crash since the financial crash, which was 17 years ago, and that's about twice the length of a typical cycle. So we're a little bit overdue. Remember, my investor playbook course is on sale at the moment. Get 10% off with the code SPRING2025. Check the link out in the description and in the pinned comment, and I'll see you later.